since post-election, we've seen complacency in the markets. You know, they've been pricing in all the potential good that the new administration might do or that's happening around the world, but really we've seen a lack of volatility. And I think that with all the disruption happening and some of the more shocking policy coming out, we're starting to see people back up and take stock of what's happening. It's really a time, and we keep telling our clients, it's a time to be cautious and disciplined and keep abreast of everything that's happening, look at the data, and keep, really keep a disciplined strategy afoot.
Yeah, Aryan, you talk about this response to some of, as you describe it, the shocking policies that have come from this administration. But, you know, overall, when you look at the earnings that we've gotten so far, I mean, up nearly 7% from last year. More than 60% have beaten estimates. So what's your advice to investors? Should they be looking at those numbers and trading based off of that instead of the political headline of the day?
Absolutely. I think you need to phase out the noise and you need to look at the data underneath the companies you're potentially looking at. Obviously, data should drive your investment decisions. Keeping a long-term view of the market, keeping a diversified portfolio is very important, especially since we're in such an uncertain time. I think data and earnings, GDP, productivity, all these things are important when making investment decisions. Again, we tell our clients that it's not about making targeted bets, but keeping a long-term view and keeping, again, a bunch of companies that can really help you get ahead depending on your goals and, again, your risk tolerance.